The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the March 4th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs, my favorite, because it just simply summarizes the whole process of becoming your own electrician, the electrician of your beliefs. You know, beliefs have got the power to create and, of course, the power to destroy. You and we've got the most amazing, incredible, awesome ability to take any experience of our lives and create a meaning that empowers us, you know, one that can literally save our lives, or you can always take the negative approach, something that disempowering you. The key here is you really need to know both. You need to understand what it is that's going to empower you to take you to places, and the easiest way to do that is to eliminate your disempowering beliefs. It's really the beauty about the markets that we trade. We've got bulls, we've got bears, we've got one that sees an event as a selling opportunity and one a buying opportunity. You see, it's your beliefs, the meaning that you give to events, to statements, to criticisms, visually what it is that you see. It's your beliefs. You are the one in control of whatever meaning you want to give to that. Pretty cool when you really think about it and you understand the awesome power that you've got, because what we can or cannot do, what we consider possible or impossible, truly is rarely a function of our true capabilities, more likely a function about our beliefs, about who we are. And that matters because each of us are always trying to break through. Doesn't matter what level you're at. You may be the best out there. Watch, and I hope that you are the best out there. And if you are, then you want to break through and you even want more out there. That's a good old American way. And how do you do that? Well, you've got to break through. And that breakthrough comes with a change in beliefs. And the way that you change is to know both. You need to know what it is that's stopping you. You need to know what your hurdles are. You need to know at the deepest level that there is a disempowering belief that's cost you in your past. It'll cost you in your present. And, folks, it will really cost you in your future if you don't address it. That is what's called the Charles Dickens process. So that's the best part of the Charles Dickens process. And that means that you need to know both, because that is taking up space and energy inside of you. And you've got to take that out. You've got to pull that out just as if you would like a drawer. And you want to replace that drawer, and you want to go ahead and send that off to space out there. And you want to replace it with your empowering belief out there. That is really how you do it. It is as simple as that. And here's the key. At any moment, a decision that we make can and will change the course of our life, and it can do it forever. The very next person you stand behind in line, sit next to on an airplane, the next phone call you make, how about the next phone call you take, the very next movie we see, the book we read, the page we turn, the newsletter we subscribe to, any of these things could be the one single thing that causes the floodgates to open. And then all the things we've been waiting for will fall into place, folks. Become the electrician of your belief system. There is nothing better. Let's go see what's falling in place out here right now. We've got the Dow trading up 181 points, trading at 16,349. S&P up 22 points. It's trading out at 1867. Composite up 62 points, trading out at 4340. Russell 2000, that is in the lead. That is the lead dog in the hunt. It's up 2.5%. It's trading up $28 right now. Apple up $3 and change. Microsoft up 61 cents. That's up 1.6%. Google's up 0.8%, up about $9-10. VIP Shop Holdings, that's up $40. That's up 32%. Priceline up $20. Chipotle jumping into the fray here. It's on fire. It's got a little peppers out there. It's up $14, 2.5%. Insys Therapeutics, INSY, is the ticker symbol. That's up 15%, up $10 and change out here. They're out with numbers. They did net income of $24 million versus a loss of $7 million. So nice turnaround there. Their revenue is $40 million versus $5.6. Boy, Insys, that has got a nice move to it. Nice fundamental move is really what I was trying to say out here. Illumina Inc. ILMN up 3.5%. We've got Luxoft Holdings. Don't know what that is. LXFT is the ticker symbol. It's up 19% here this morning. I don't know if there's some earnings out. They provide software development services, IT solutions, to multinational corporations in Western Europe and North America. Now, to the downside, you've got AutoZone leading the charge. AZO, it's off $14. We took a look at the stock chart out here. Boy, on the weekly and the daily, that thing is a strong rocket ship out here. AutoZone, depending on the volume that's coming out of it, AutoZone may be one you want to go take a look at putting on your schedule here for potential long holdings. That thing has been in a big bullish mode out here for at least the past year. Intuitive Surgical, the downside this morning, it's trading off about $9. China Mobile Games, CMGE, off 10%. It's down $3 and change out here. What else we got? WebMD, that's off about $1.77. Our call number is 877-927-6648. Give us a call, folks. Would be happy to take a look at your chart here. Let's start off by taking a look at the stocks. Let's look at the semiconductor index out here. This thing has been just simply a rocket ship. It's off to new highs here this morning. It's trading above the, it's trading above the 1.618 expansion, or it's trading right at it, I should say, the 1.618 expansion of its last set of swing points. That's January 22nd's high, 547.92, down to the low that was put in on February the 5th out at 512.72. 569.67 is your 1.618 expansion. It's trading at 569.84 out here. Gapping up into the 1 to 1.272, A to B equals CD. It looks like the SOX index wants to trade up into the 583 range out here. This market is not going to move lower with the semiconductor index participating to the downside out here, and it is not participating to the downside as we speak at the moment. Let's take a look at the Russell 2000. Russell 2000, big, huge rocket ship. Now, the Russell 2000 clearly, not just slightly above, but clearly above one of the most bearish patterns out here. That's that 3 drive to a top pattern that I completed and confirmed on January 22nd out here. So what was one of the weaker indexes out here is actually just as strong as you can get it. Now, let's take a look at expansions here of swing points. Let's take a look at the expansion of the high from January 22nd down to the low out here on February 5th. The 1.272 area is 1209.06. Let's use the Basil-Chapman wave. Let's go count the peaks inside of this thing, see where this thing is at. Count up, we'll hit it. So now what this is because it couldn't be, an instant recharge. It's got to be its 5th peak out here. But this thing wants to get, if you're coming into a swing point, a expansion like this at the 1209.06 level near 1206.42, this is suggesting it wants higher price out here. I can't come up with a pattern other than potentially you'd have to say your A to B. Let's put this on a weekly chart. Let's just do that. That might make it a little bit easier to identify. That's the daily. I don't want that. I want the weekly chart out here for the Russell 2000. So the Russell 2000 would have to say I would come back here to October the 11th, and that would be the A point of an A to B equals C to the upside. So we'll go do this in the IWM as well. We'll take a look at the volume patterns here. So this says that the Russell 2000 on a weekly basis wants to move up to 1267.08. That's another 60 points above where it is at right now. 1227.41 is your 1-to-1 A to B equals CD, but not a chance. Now let's go see volume-wise what it's doing here. So let's go take a look at the IWM and take a look at IWM here. So IWM this morning up over resistance, most certainly 20 million shares. So you got some good volume. Heck, you got 47 million shares from February 28th. That's its swing point. So well above that on a daily basis here with nice volume. No price relative strength divergence or anything along those lines here. Now on the daily chart here, I was using a weekly chart. I was using the in essence the week where October 9th had made the low. So let's take a look. Choose that swing point for our A point of the A to B equals CD to the upside. Now, your B point is going to be January 22nd. That's got 24 million shares, and the IWM moved above it with 40 million shares. We'll go ahead and draw the lines on my. Let's do this here. Let me get rid of the. I'll try this. Let me get rid of these lines. Let me see if that gets rid of the primary trading range boundary lines. Let's see if I can do that. Yeah, okay, good. All right, good move there. Now, I'm just going to try to clean this chart up. Makes it a little bit easier for you to follow along with regard to all these lines that are out here. Now, what we're going to do is we're going to go ahead, go to our, in fact, let's get rid of this 3 drive to a top pattern. Let's just simply get rid of it. What we know is that one of the more bearish patterns has been taken out, and taken out with volume. 24 million shares on January 22nd. We'll use a red line out here, different than the red lines that our politicians somewhat back away from. We don't back away from. We use these red lines out here because we want to know if a swing point is being taken out with volume. Now, first time we saw a move above February 20, above that swing point, I should say, from January 22nd. Was on February 27th. 29 million shares. It exceeded the volume. That confirmed an A to B equals C to the upside. You had 47 million shares on the very next trading session. That was on Friday. Yesterday you pulled back with similar kind of volume out here. Today you're up with volume already 20 million shares, so that is big out here. Now if we take a look at coming back to that swing point from October 9th on the daily, your 1-to-1 out here, which has been confirmed inside of the IWM, so you wouldn't want to be short this, 121.59, but Stevie says not a chance. You know, this will want to do more than a 1-to-1 A to B equals CD up. This will want to go on a daily basis, 125.50. So that's what the daily is showing. Let's go take a look at the weekly chart here for the Russell 2000. Let's go see what it is doing. No, Stevie's son's got one of those V-shaped bottoms out here, and we've seen several of them. Rarely do we see these things fail. In fact, inside the IWM, you can take a look at the one in 2009 at the bottom. You can take a look at the one that formed very clear V-shaped bottom out here January 4th, 2013, and now we've got the next one that is in play out here. But what we wanted to do was take a look at volume patterns, and the volume pattern using the January 24th volume, that's 147 million shares. And last week you closed just over it with 189. The high was 117.37. January 24th, you closed at 117.52. So you closed just above it, and you did it with volume on a weekly, on a daily chart inside of the IWM. The weekly chart shows that it's coming into its next primary trading range boundary line out here, 119.98. That means really 120, and what we've hit today is, well, geez, how do we do that? So I've got this tool that I have built here that goes back and it takes a look at whatever's on my screen, identifies the areas with the largest number of co-located opens and closes. What I draw there is a thick solid line. That's your 82.38 range. Now you like to go ahead and actually round these up a little bit. But you can see here as I pull this back, 119.98 is the number you're trading. It's gotten up to 119.98. Out here right now. So that could be a slight area of some resistance out here. But you've got a confirmed A to B equals CD up on the daily, on the weekly. Hey, wonder what we have on the monthly out here. When we come back, well, I don't know if I can do that. Not that I don't want to. 877-927-6648. Be right back, folks.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for The Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow up 200 points right now. S&P is up 24. And on the monthly chart here for the IWM, you can see it's above the 1-to-1 A to B equals CD. It got to that level back here in November 2013. You get above that level, you head up to the next one, and that is the 1-to-1.272. That's 126.91. That's what the monthly chart here for the Russell 2000 is communicating to us. Sorry to spend so much time on the Russell, but that was the index. That was the index that was breaking it out. Let's go back and take a look at the daily indexes here. Let's go take a look at the S&P 500, see what it is doing out here. Actually, we want to take a look at the Dow. Dow New York Stock Exchange. I'd have to say we want to do that. So let's take a look at the Dow here next. Let's pull the Dow back. And the Dow here is trading back above the 0.786 retracement level, which is 16,321 out here. Now, in order for the Dow, what the Dow looks like it wants to now do is get up and test the December 31st swing point. That's on the daily chart that we're looking at. And the low of that is 16,446.68. So we're at 16,365. You've got about another 70 points or so in order for that to occur inside of the Dow. Let's go see what the diamonds here. Now, if we take a look at the weekly chart, let's put the weekly chart. Let's just switch this over to weekly inside of the Dow and see where it's at. I just want to see if it's in the swing point. It's not. So the low of the low for the Dow weekly swing point is 16,416. How about the monthly? Let's see if it's in there on the monthly chart out here. Yeah, of course it's in the monthly. In fact, the monthly here, the monthly gave us a bearish reversal signal. Did that in January, and the reality is that February's close took that back. And so it makes that entire reversal signal very suspect. You still respect it, but suspect. But inside the monthly, the Dow is trading inside of the swing point from December And so that says it wants to go test the highs out there. Again, that says it wants to test the high, 16,588.25. Let's go take a look at put this back to the daily chart. Let's go switch over and take a look at the Diamond ETF out here. Let's go see what it is doing, see what kind of volume we've got behind its move out here today. A moment here to pull that up on the screen. The Dow Diamonds. Now, yesterday, the Diamonds moved back, but they didn't move back with any real significant or accelerating volume. They did a similar volume to what they did the prior session, which was February 28th. They did 10 million shares. Yesterday, they pulled back with 9 million shares, even just slightly lighter volume out here. Now, what the Dow is doing today, it's trying to get above. Let's get rid of this A to B equals CD to the downside. Not that still may not be in play out here. In fact, I want to just clean this chart up. We're going to get rid of that old consolidation pattern out here. So that's now gone, vanquished from the screen. What we're really paying attention to here is this little gap down that took place on the trading session of January 23rd. So the low of the gap, meaning the January 22nd candle inside the diamonds, is 162.99. And that's really, in essence, held as resistance. It was tested once out here. Today you are up above that level. And volume-wise here, you've done 2.3 million shares. We've been trading for about an hour, so volumes, you're going to do more volume in that first hour. Struggling to get the energy or the juice behind it. Of course, the swing, to right now to take out the most recent high, which was February 28th. But it doesn't really need to take that out. The volume really benchmarking here is that downdraft of 9 million shares, and that's what's most interesting probably about the Dow here and that resilience, because you had the downdraft on January 23rd with 9.9 million shares, and yet you were up with 10 million shares on Friday. It had some pretty decent volume in there. So it says the diamonds here, they are going to head up. They're going to go try to test the 164.81 to 165.51 level. That is your December 31st. Now, there's only 5.6 million shares up there. If it takes that out, that would be extremely bullish. And if you come into it with volume, that would be suggesting that you're going to at least go test the high at 165.51. And if you take that out, then that's going to set up a large A to B equals CD to the upside. We'll take things one thing at a time, but if it did take it out, that would give you a price projection inside of the Dow that would take you up to 171.68 to 176.72 out there. Let's go take a look at the Qs. As long as we're inside the ETFs, that's really been strong. Of course, Russell 2000 today being the real strong element in the market here. The key reversal session that took place inside the Qs was February 28th. That makes that high of 90.96 very important. Volume up at the high, 48 million shares. So far today, the Qs have done 9 million shares in an hour. So pretty decent volume in an hour of trading. Of course, as we saw yesterday, we've seen that first hour have pretty good volume and then wane and kind of fall off during the day out here. So the key level is the Qs. If the Qs can close above that reversal, it's not a bearish engulfing. It is a key reversal session. That would be very, very, very bullish. $90.96 is the number. You're trading at 90.79 right now. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Eight 877-927-6648. Give us a call, folks. Take a look at your stock chart. Right now, the Dow is up 195. S&P is up 24 points. So the only thing here that is not confirming the move out here, it's the currency market that knows something is up ahead of time, and that is our friend, the Euro Japanese yen. So let's take a look at it here right now. And even with regard to this morning's move out here, we've got kind of like what I'll call a double non-confirmation out here inside of this currency pair. Now, if we come all the way back here, if you're watching us on Tiger TV, if we begin with this little swing area right around the January 28th time frame out here, January 28th, looks like January 27th, January 28th, we can see in the top portion of the screen that we're looking at, that is the ES Mini. It's the S&P futures contract. You can do the same thing on the S&P. It's just that during the overnight trading session, where the currency pair is trading as well as the futures contract, you're going to get signaled as to whether or not that divergence has disappeared or whether it's expanded or what have you. So in this case here, we can see that the ES Mini has made a nice higher high versus down at the bottom half of the screen here, the Euro Japanese yen has not. And these are really important divergence patterns here. And it still has not done that. Now, even today, if we just explode this up a little bit here, if we come to the swing point from Friday, February 28th, clearly up here, what you can see is you can see that the ES Mini has made a higher high. We'll just go ahead and we'll draw a little small line out there. I'll just move it off of that a little bit. So you got the higher high going, just like we've seen all the way back here from January 28th. But yet, on the Euro Japanese yen, we're not seeing that. We're actually seeing a little bit of a lower high right now, so we've got that divergence that is still out here. So the currency pair is the one that right now is just saying, hey, not so fast out here. Now, unfortunately, you can't use this as a timing tool, but it is like Paul Revere riding through the streets, only in perhaps an even larger way out here, and is the currency pair that really is the one that guides the way out here. Now, if you can get the Euro-Japanese yen, let's go take a look at the daily charts on it. Let's go see what we have going on some of the daily and intraday charts out here just to take a look at it and just try to put a better perspective on the entire currency pair and what it may be doing. Let's take a look at the daily chart here for this currency pair. That's the Euro-Japanese yen that we're taking a look at. Now, as we pull this up here, you can see here's the January 28th, so you can see the high out here. See we've got a lower high right there versus, if I were to put up the S&P, you can see that is clearly not the case out here. And so, but what the Euro-Japanese yen also does have in place here right now is it is showing me more so that it wants to make a move higher, meaning make that 0.786 retracement from its highs out here, and the highs being December 27th down to the low on February the 4th out here. So you can see how this is kind of a leading indicator with regard to our markets, because this made a high on December 27th. Our markets made their high December 31st. Our markets made a low basically February 5th. This made its low on February 4th out here. And right now what's truly in play, if you're a student of A to B equals CD patterns out here, if you take a look at the retracement that has taken place to form that B to C leg, that is February 27th. And you don't have volumes out here, so we can't really use volumes. What we can use is we can use candle signals, we can use retracement levels, and it has not even retraced to the 0.618 retracement. So only a 50% retracement, stronger than a 0.618 retracement out here. And, unfortunately, this is just simply consolidating, sideways. It's been consolidating really since February 7th out here. So, we're nearly a month worth of consolidating sideways. Now, one way to take a look at that is, when you consolidate, oftentimes you're going to break in the direction that it was coming from out here, but let's just not get into that. At this stage here, when you take a look at the candle sessions out here, they're more bullish than they are bearish coming off of the C point out there, and so it could resolve itself to the upside. And if it does, it'll have a lot of fuel that'll be put into the fire out here to go ahead or should have enough fuel to move our markets higher. Now, on the intraday charts out here, let's see if I've got the 120-minute chart for us to take a look at. Here is the, you can see what it's done. It's made an expansion of swing points. What I mean by that is if we come and take a look at the high of Sunday when the market opened, that was out at 140.04, and I go from that high down to the low that came in at 5 o'clock in the evening on yesterday. What we will see here is it's close to the 1.272 expansion would have been at 140.28. You're trading at 140.29. So it's made the 1.272 expansion, which is a normal spot for a market to rest. Now, on the 120-minute chart, it's not overbought. So, the rest can be just like to catch its breath. And that's really what the candle signals. Now, if we take a look at also the retracement, and it's a 120-minute chart from the high out here at 11 o'clock in the morning on February 28th down to low, put in yesterday down at 5 p.m. or Sunday evening. Yesterday? Yeah, yesterday. No. What's today, the 5th? No, the 4th. Yeah, yesterday. Yesterday at 5 o'clock in the evening. We can also see it's really right at the 0.618 retracement level, 140.35. Now, as we take a look at that, I'm going to get rid of, I'll leave that retracement level up here. So as we take a look at it, it's closed the gap, that gap which was formed from Friday's close versus Sunday's open out there. So it's at least closed the gap, but there's no bearish signals out here. There's no bearish reversal signal out here. Even this last session out here, I would have to say that this wick at the bottom of it, you could say, hey, maybe that's a shooting star. And I'll give you the benefit of the doubt. Let's go ahead and we'll say it's a shooting star. That even means that, which I don't think that it is, because the wick at the bottom there is just a little bit too much for my cup of tea, but it might fit for your cup of tea. So I'm going to go with your cup of tea out there. And that says at the high of 140.46, the last 120-minute bar, the one at 9 o'clock, you know what, if that gets taken out and you use that as a shooting star, that would be resistance, and that would even tell you that, okay, this is ready to power up and at least go make a 100% move and get back here to the 141.02 141.10 level out here. Now, what's more important is that this rising price channel that it has created, it's still within inside here. So the Euro-Japanese yen, even though we take a look at the correlation on the daily, and that correlation is out there that says, hey, not so fast. When we take a look at the daily and the intraday charts out here, they're giving me the signal that this currency pair wants to move higher and that it will eventually resolve itself to the upside out here. So just take that for what it's worth. Let's take a look at the Goldilocks gold contract out here. Let's go see what it is doing. Gold right now finding support at the 50-day exponential moving average. Let's pull that back here. 50-day exponential moving average is priced out at, do I have it out here? Yeah, it's got 1330.90. The low that we've seen here so far today, 1331.20. Right now, a little bit of a piercing candle out here. But what we do know is gold yesterday broke above this little key reversal session that took place on February 26th out here. It's found resistance at the 50-day. I would not exactly say that Goldilocks has broken down here just yet. So even gold is kind of saying, hey, not so fast. If we take a look at silver, which is weaker than gold out here, silver has found resistance at that long-term descending price channel. It's a red diagonal line going across my screen out here. If we take a look at the pullback, pulling back into the 0.382 retracement, that number is $20.95 out here. Now, if in fact silver can close below 20.98 is the little doji swing point out here. That could be the B point of an A to B equals CD down. 73,000 contracts down there. You'd like to see it get down there on lighter volume. Well, today it most certainly would, or at least at this stage, only 33,000 contracts, have traded. If we take a look at that, that would be your nice setup because your 1-to-1 A to B equals CD takes you right back to the top of the consolidation box, which when it broke out of it, never tested. And you'd like to see something come back to the consolidation box. So a potential nice buy on inside of silver, somewhere in that $21 and $20.50, $20.60, somewhere right around there could be a nice buy inside of silver. In fact, what it would do, now it has to get much lower in order to go ahead and form a 0.618 retracement out here. Now remember, H.M. Gertley, he didn't use the Fibonacci numbers. He just said you needed to have an A to B equals CD to the downside. So in the beginning of a bull market, you want to be able to buy the first Gertley buy pattern, and that's really what would form there. If we take a look at expansions of this potential B to C swing point out here, the 1.618 sets up real nicely right there at the $20.58. So let me actually draw the pattern here, and I'll go ahead and get rid of the lines just to make it kind of nice and easy breezy out here. So here is the point close to the 0.618. So let's go ahead, Control-O. Let's get rid of a couple of things out here. Formation, let's get rid of that Fibonacci level out there. Let's delete there. There we go. A little bit cleaner here on the pattern. So here is the real nice buy setup. See how this would also come back? It'd be about the 50-day exponential moving average. You'd be right at about the top of the consolidation box. It'd be right here where we had the breakout, nice wide-ranging bar from February 14th. So that would be a nice pattern if, in fact, it sets up there. And that would be inside of silver. Let's take a look at light sweet crude. Let's go see how it is trading out here. Light sweet crude still finding support at the bottom of its rising price channel. This rising price channel that began to form as it made its most recent low, which was back in January 14th, 2014 out here. So that is a nice rising price channel here. And until it breaks, light sweet crude could certainly move higher. If we take a look at bonds here, see what bonds are doing. They are pulling back here this morning. Problem with the continuous contract here is because we had a changeover in contracts. This gap down is not real out here. So let's go back to the. Let's take a look at what it's doing though, even on a weekly chart out here. And on the weekly chart, what's interesting about bonds is that they have broken through this descending price channel out here. I wonder if. They've just simply broken through that little descending price channel. And, they ought to find resistance here. Here's the, so in bonds, it's a little bit cleaner chart out here with regard to the consolidation. Let's go ahead and draw that in on my screen out here. And we'll go ahead and put it here. So here's your large-term consolidation pattern inside of bonds. And you can see every time bonds have tried to break back into the consolidation pattern, meaning they tried to break into it. Well, once they broke through it, they tried to break back into it in July of 2013. It's a weekly chart we're looking at in both October 25th and November 1st, the week of, and they have not been able to do it. But right now it looks like and you can see here, these candle sessions, these little spinning top doji-type candle sessions, you have basically, 5 in a row. 1, 2, 3, 4, 5. This is being kept, because the body price truly is the essence of price out here. The wicks, the shadows, up or lower, they're just simply the extreme emotion of the trading session, in this case here, the trading week out here. So it's just also telling us that it's tired. It's getting tired as it's trying to make these highs out here. It's lost its energy. It's lost its strength out there. So that's what the continuous contract for bonds are communicating to us. If we take a look here at natural gas, that gas right now, having a nice morning. It's up about about 9 pennies here right now, but natural gas could, in fact, be forming an A to B equals CD to the downside. Let's take a look at some of these world markets out here. Let's see what we have going on inside of the FTSE. FTSE here on the weekly basis, it truly is trying to, it's above the 2007 highs out here. Then we'll switch back. We'll go take a look at the New York Stock Exchange because we want to take a look at that for sure. But first, the FTSE out here has really broken the consolidation level. All that it really needs to do now is just clear the price point of 68.75.62. If it does that, then it has broken out above a very large consolidation. Consolidation inside of the FTSE goes from 3,500 up to, we'll call it 6,500. So you've got a 3,000-point consolidation breakout that the FTSE is attempting to complete and form out here. Let's go take a look at the DAX, see what the DAX has done here this morning. And it has taken back all of its losses from yesterday, trading into the session here from February 28th. The low there is 95.66 out here. I don't have volumes on it, so I can't tell you if it's moving up with volume or not. Let's go take a look at the New York Stock Exchange, though. Let's go see what it is doing out here. Today, right now, the New York Stock Exchange is up 143 points. So let me see, where is this in comparison? Percentage-wise, leading the charts the upside. Russell 2000, obviously, up nearly almost 3%, 2.8%. Then you've got the NASDAQ Composite. That's up 1 7/10%. The NDX 100 is lagging a bit. It's only up 1 3/10. The New York Stock Exchange is the third out here, up 1 4/10%. Great market breadth for sure. So it says that the move here is certainly real here this morning because you have 2,600 advancing issues and 300 declining issues. So that gives you if I do the quick math, almost a 9-to-1. So we'll call it 8.5-to-1 advancers outpacing declining issues out there. And so that itself is bullish. And if we go back and we take a look at the New York Stock Exchange, it is above October of 2007. That is very bullish. That is very positive right now. It's trying to get above even the high from Friday, which is 10,471.63. It is above the high from Friday. It's 10,471.71. 877-927-6648. Be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Welcome back, folks. Dow's up 194, S&P's up 25, Composite is up 74 points right now, and back on the New York Stock Exchange on the monthly chart out here, and this is the one that's most important. And you can the way that these consolidation patterns work out here, if you come back and you take a look at the New York Stock Exchange, you go back to 1997, the New York Stock Exchange was consolidating somewhere around the 4,200 level, all the way up to the highs that were put in back in 2000, in August of 2007. Makes a way up to about the 7140 level. Can't bust through that. Comes all the way back down to the bottom of the consolidation. Gets back up there and hovers around this area between November 2004 until the final breakout, which was in July of 2005. It breaks out of that, and what does it do? That yellow shaded box, if you're watching this on Tiger TV, that's the consolidation move. That makes a measured move equal to or greater than the consolidation. That's exactly what took place as you come all the way over here. It makes that move in May of 2007. Makes a higher high on less relative strength all the way into the October 2007 time frame out there. So you got that price relative strength divergence. You get a nice bearish engulfing candle in November of 2007. Follow through the following month, and that set off the cascade that went all the way back down to the bottom of the consolidation in the New York Stock Exchange, all the way back down to that 4,400 level. So we've been consolidating now a larger consolidation, 4,400 to stick to 10,400. Right now you're trading at 10,472. So that's a 6,000-point consolidation break, potential breakout here inside of the New York Stock Exchange. What can upset the monkey card out here?
I don't know if it's a monkey cart, if it's an apple cart, what kind of cart it is. How about just the New York Stock Exchange cart? What could upset the cart out here is 1, 2, 3 is not this month, but in the month of this is March, right? April. To see the New York Stock Exchange actually make a higher high, do it with less relative strength, meaning that the RSI reading does not get above 73.51, and then the following month in June, or the sell in May, I should say, the May candle would be a reversal signal out there. And that's what the monthly chart here for the New York Stock Exchange is telling us. So right now, as we kind of summarize where we're at here for the day, you've got extremely good market breadth, somewhere between 8.5 to 9 to 1. So that is good for the New York Stock Exchange. New York Stock Exchange, even with the move lower yesterday, was unable to push the price and volume oscillators below zero. That says the bulls still have control of the ball. If you come over and you take a look at the VIX index, the VIX index is below the 50-day exponential moving average right now, priced at 1478. Plenty of liquidity in the marketplace. That below the 50, that is where the market moves either higher or sideways. At this stage here, we are moving higher. The only thing you don't really have going for you right now, we covered that, was the Euro-Japanese yen currency pair out there. But as we took a look at the daily and the intraday chart, the 120-minute chart out there, its indication is that it actually wants to move higher. And if you get that, you're going to see some pretty big fuel in the market out here. Not that you don't see some good fuel here right now with the Dow up 190 and the S&P up 25 points. So that's what we are looking at as we speak. Biggest loser of the day out here is AutoZone. And AutoZone, out with good numbers, good top line, good bottom line numbers out here. AutoZone, let's see what kind of volume it is pulling back with, if there's any volume off of the highs out here. So it's got some pretty decent volume on the pullback. Today so far, 324,000 shares. This thing most recently broke out with about 718,000 shares out here. But the AutoZone has been one heck of a strong-looking stock chart. In fact, you'd like to see it get back into this little gap up from February 6th at about 493.01. Do it with less than 600,000 shares, and that might be a nice little buy. Stay tuned, folks. Basil Chapman is up next. It is Tuesday. We have the Option Hour. Daryl Martin, David White, the Andy Heck Show. Andy has got, I believe he's got Dennis Gartman on, so stay tuned for that from 3 to 4, and the Tom O'Brien Show from 4 to 6. Have a great trading day, folks. Look forward to seeing you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.